the closing day of day 41. You can see the SPY didn't close below 300. So what I was saying earlier was SPY closes below 300, then we're definitely in the danger zone, and that's going to pretty much indicate a really big crash. But nonetheless, it did not close below 300, so there is hope that the market won't crash. So what I'm expecting is going to happen next Monday. There's probably going to be a bounce. This yellow line is probably going to bounce off this pink line on the 4-hour period, and then it'll go up a little bit, and then it goes sideways. If it does go sideways, then the crash will probably happen by Wednesday, if not by Friday, because Friday you're going to have a lot more options expire. So people are going to try and do some weird squeezes, but nonetheless, we are heading downhill. I can definitely see that, and that's why I chose to sit out of the market, and I chose to purchase BDCs. So currently I have the position on GSBD, which is Goldman Sachs BDC fund, or I guess BDC stock, and pretty much it's been stable pretty much all day for the time I've purchased it. I am wanting to exit it on Monday after the ex-dividend date so that I will get paid the 45-cent per share dividend, plus I'll be able to sell it and make a little bit of capital gain. Because the market crashed a little bit today, it didn't go up like I thought it would. So I was expecting it to be somewhere near $16.70, almost $17 by today. That way I would be able to sell it at $17 on Monday. So I'd essentially make 50 cents there, plus or minus, and then I would make the 45-cent dividend, so I'd make about $1 per share. Nonetheless, that did not happen, but we will see what happens on Monday. And let's take a look at what the VIX is doing. Looking here at the VIX pretty much was skyrocketing all day. Would have been a really good VIX day trade had you caught it on opening or at 50. Let's say you got a 56 call and went up straight to, not 56, a 36 call, and it went straight to 37. You could have got like a 1.8x or 1.6x, somewhere around there. I think 1.8x is about right if I did the math. Then you could have just day traded that, made quick profit. But nonetheless, because this volatility is really high, SPY is starting to crash. I am going to sit out until we figure out if the SPY has bottomed out or if it's going to crash. Because if it really does crash, then we're in for a really big show, especially for puts. So like taking a look at Dow companies like American Airlines, it's just completely getting pooped on right now. Went from 15, it was almost up 20, and then now it's like less than 50% again. I'm assuming all the airlines are pretty much the same. Love is about the same. Delta's about the same. Royal Caribbean Cruise Lines, Carnival Cruise Lines, Norwegian Cruise Lines, all doing the same thing. So pretty much what we're going to see now is probably a rapid decline. They'll probably bottom out near 11. That's where Norwegian Cruise Lines. So bottom out 11. Everything else will drop down about that low. So I want to say about 10%. Maybe 12%. So everything on the Dow will probably drop about 12%. After that 12%, then we'll probably see a bounce. And that'll probably be near the end of July, maybe beginning of August. And hopefully, as they say, they're opening up in September. That's going to be the dip where, if I were to trade these, I probably wouldn't trade options just because they'd be in the penny levels. I'd probably buy the stock. And then, they could very easily get 40-50% without having too much volatility and craze of going up and down, where you can lose money by buying options. So if I buy any of these smaller companies, I'd probably go with the stock. As far as options, I've been studying these charts. I'm probably going to go options on Microsoft. Looks like Microsoft volatility is really nice. You can see here, it was here at 203. You could have bought puts, made money here at 196. So I would have bought a $200 put here. Would have crashed, and then you could have bought a rise, like a $200 call. Went up there, sold it, and then you could have bought $200 put again as this yellow line crosses purple line, and it went down here in 196. So what I'm seeing is this oscillation. So if it wasn't a Friday and it was like Monday, I'd probably buy a $200 call on Microsoft because it'll probably oscillate up to $200. You get another 2x. So here you have 2x, 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 2x. So overall, in a week, you could have got 8x on Microsoft. Really easy. I've just been watching it. This is theoretically. I played it on paper, and it's been working out. And I think the pattern's really consistent just because Microsoft's able to do a lot of their work from home. So they're not really affected by the coronavirus. But we'll see what happens coming next week. Currently, right now, I have my GSBD position. And I'm going to exit that on Monday, and then from there on, I'm going to see about playing Microsoft stocks, doing weekly options on it, make some quick day trades, and then from there, I'll probably roll over to looking at some of the penny or Fortune 500 companies, which are now pretty much going to be penny stocks. And for me, penny stocks are anything less than $15. So that's going to be where I'll buy the stock, I'll probably hold it for like a day or so, make like 70 cents a share, and then just sell it really quick and just rinse and repeat. So the strategies that I have now are completely different than pre-COVID. Pre-COVID, I was really good at swing trading, a couple day trades, but now it's pretty much you can't really do as many option trades unless you have the money in your account where you can consistently day trade. But I feel like if I switch it up, I can do a couple of day trades. I don't want to do any long option calls or puts anymore just because the volatility is crazy. But I will probably pick up some of the stocks as far as anything less than $15 that was once a Fortune 500 company. The last stock that I did trade paper was Oxy. It looks like Oxy did break the trend line. I was initially predicting Oxy was going to bounce somewhere around here, go up to 19. Unfortunately, it did not bounce, so it's hovering below this line. So I'm predicting, there's a double bottom here. It'll probably go back to 18. So this would have been a good call, 18 into next week. But nonetheless, I'm not playing it. We'll see what happens over the weekend. But I'm still my paper trade on Oxy is for 19. It's expiring next week, so there's still hope. As you can see that the stock went up, down, consolidated, and so that's pretty much why I do this triangle. And I was like, okay, it's going to go higher. It did not go higher. So right here, if you see the bands, there's 1, 2, 3, 4, 5, 6, 7, 8, 9 points where it pretty much touched right here at 1749. I would say that's pretty much the bottom of Oxy. So from here on out, it should be going up to $18. So if this was below my $15 mark, I would probably have bought the shares, waited for it to go to 18, and sold them. But for options, this would be a really tricky option. You could play the option for 18, but more than likely, if this is something I would play just to be a little safer, just to not have too much risk, I would just buy the stock here. Because if it goes up a couple cents, you can sell it, make a couple cents. That's a lot better than saying, hey, I'm going to go to 18. And we see something volatile like what happened on the SPY and just completely crashes and you just go to zero. But nonetheless, if you like anything that you've seen today, then pretty much if you can hit that like button, hit that subscribe button, or check us out on the Options and Traders Network. It's www.optionsandtraders.com.